Good afternoon, or good evening, or good morning. Hello, my name is Frank Tidicus, and I'm with SCORE Treasure Coast Chapter 308. And we are doing a webinar on Florida sales and use tax. This should last approximately 40 to 45 minutes. You're able on the right side, if you have any questions as we go along, to type in your questions. I will stop the presentation and respond to your questions and answer them. Meanwhile, let's get started. And so let me bring up the slide presentation. There we go. As I mentioned, we're going to talk about Florida sales and use tax. And you have any questions, you can reach me at tidicus@bellsouth.net, tidikis@bellsouth.net. There's other additional information that you can reach through our Treasure Coast SCORE office by hitting our website, or you can also go to SCORE Organization, which is the national website, and they will be more than happy to provide you with templates, forms, whatever you may be looking for. We also do face-to-face counseling and approximately 120 workshops a year, as well as webinars. So feel free to access any of these services. They're there to help you. We're interested in helping businesses in our state and in our area. We believe that businesses, drive our economy. So let's talk about the Department of Revenue. They administer over 30 taxes and fees. However, we're going to focus today on sales and use tax. So this just gives you an idea of other taxes that the state deals with. What is a sales tax? Basically, it's a transaction tax. It, when you buy a good or a service, there is a tax that is imposed upon it. And there's also a use tax is charged for something that you may have bought outside of the state of Florida, but you're using inside the state of Florida. And we'll address all of these in a little more depth. Bear with me. So let's talk about some of the general transactions that are dealt with on the sales tax side. Sales of tangible personal property. You go into a store, you buy some clothing, it's going to be taxed. If you own a condo or a house or something that you're renting out for less than a 6-month period of time, then it's considered to be a transient rental, and you're going to collect the tax on it. If you own a building and you rent it out for commercial purposes, you're going to collect the tax on it. Movie theaters and theaters collect taxes on admissions, as do amusement parks. There's some services that are taxed, and also service warranties, and amusement machines, arcades, are all taxed. So let's just talk a little bit about sales and use tax general transactions, okay? What are they? Retail goods, clothing, furniture, prepared foods. You go to a restaurant, when you get your check, there's a sales tax at the bottom of that check, for 6%, or it could be a little higher depending on the part of the state that you live in. Transient rentals, as I mentioned, anything less than 6 months is considered to be a transient rental, and you're obligated to collect the sales tax on that. It also applies to automobiles, boats, and aircraft. At one point in time, I had an aircraft leasing company and rented the plane out on an hourly basis, and had sales tax was collected for each one of those transactions. Commercial rentals, If you own a building that you're leasing out or renting out for commercial space, you are obligated to collect a sales tax on those items, on that space too. And general transactions, okay? So admissions to games, sporting events, performances. Go to the Lyric Theater, there's a tax attached to the cost of the ticket, as is if you go to a movie theater, you're going to pay a tax on that. Amusement parks, same thing. Go to the water theme park here in Martin County, you will pay a sales tax on your entrance. Go to a spring training game, go up to see the Mets, and or even the Grapefruit League, and there is a sales tax on those transactions also. The services that are taxed, non-residential cleaning services, non-residential pest control services, and also security services. So let's just take pest control, because this is a great example. If you have a pest control coming into your house and on a, say, a contracted basis or a weekly or a monthly basis to spray, there is no sales tax. If you have them coming into your business, you must pay a tax on those items. The state differentiates between your personal goods or your personal services as well as your commercial services. Some other general transactions, service warranties. If you buy an appliance and you take out the service warranty on that appliance, you will pay a sales tax, or will be charged you at the time. Amusement machines, if you go to an arcade, part of the cost, or let's just say if you put 50 cents into an arcade machine, 3 of that 50 cents is taxed. The other 47 cents is the cost of using the machine. So what are some of the exemptions to a sales tax? Well, state and local governments, surprise, surprise, do not pay any sales tax. Some qualifying nonprofit organization get a certificate of exemption. I'm involved with a couple nonprofit organizations in Martin County. They have a certificate of exemption that is provided to them by the state, and as a result of that, they do not pay sales tax on the goods and services in which they purchase that would normally be taxed. There are over 130 different exemptions, and they're too numerous to list here. However, if you go to the Florida Department of Revenue on My Florida, or the Department of Revenue on myflorida.com, you will find a list of all of the exemptions on there, or you can look them up. They're also enumerated in section 2.12.08 Florida statutes. As I said, they're too numerous to list here. So some of the general items that we can talk about is food. The state does not charge you sales tax on items that it takes for you to sustain your body. You know, that's rather decent of them. I'm not editorializing, I'm just commenting. But if you go to a grocery store and you buy food items, you will not pay a sales tax on those. However, in that same grocery store, if you buy a sandwich that has been prepared at the deli counter, you will pay a sales tax on those items. You will also pay a sales tax on any paper goods, cleaning supplies, things along those lines. A good differentiator, and it's rather interesting, is there is no sales tax on water. Our bodies need water in order for us to live. However, if water is flavored, and there is some flavored water that is sold, you will pay a sales tax on the flavored water and not on a regular bottle of water. Some other exemptions: medicine is exempted, common household revenues are exempted, and Form DR 46 NT, which means non-taxable, gives you a list of all of the items that are exempt from taxation. Here's an example of it, or this is the form that if you were to go on the website and look it up, you would see. And that form gives you a pretty good idea of what are the items that are non-taxable medical items and general grocery items. As I mentioned, you can get it on Department of Revenue at myflorida.com, and it's very specific. So let's talk about some other exemptions. If you have a business somewhere, you're shipping items out of state, you are not obligated to collect a tax from your customer. So say you have an internet business, or you are doing business in the state of Florida as well as in other states, you do not collect a tax on items, that you send out either by mail or common carrier. What's a common carrier? UPS, FedEx, and other shipping agencies. On items that you may sell for resale, so you do not pay tax on those. You have a reseller certificate and an exemption for that. The state is only interested in collecting the tax one time, and as a result of that, that means that they want to collect it from ideally the end user. And so if you are selling something that is going to be sold by another party, if you're a wholesaler, you do not collect the tax. However, the ultimate retailer would collect the tax from the seller or from the buyer. I'm going to hit three areas that are a little bit unique, and they're on installers, manufacturers, and repairers. Let's talk about installers first. An installer, if somebody is going to install something on real property and they're going to install it permanently, the installer would pay the sales tax on the materials and tools, and when they would not collect any sales tax from the customer. However, they can build their pricing structure in such a way to cover the cost of the tax. They just don't have to enumerate it, and they would not enumerate it on their receipt. An example of this might be, let's just say a plumber comes in and puts a new sink in your house. It's being permanently installed on real property, which is a building, and so as a result of that, the installer would end up paying the sales tax on the material that they would use to, which would be the sink and any other parts that would go with it, any tools that they would have to buy for that installation, and they would not charge you sales tax. They would charge you a fee for putting that in, and perhaps even would lay out the cost of the sink on the invoice, but at the same time could not reflect a sales tax on there. The other hand, if an installer is not permanently installing something on real property, the customer would pay the sales tax on the material, but not the labor, unless the material and labor are on the same invoice. What's an example of this? Say you buy some drapes, okay? The drapes, they're not permanently installed because they can be easily removed. If you were to move and decide to take them with you, you could take them with you, even though they're being installed on real property, i.e. a building. The issue was that they are not permanently installed. So you would have to pay a sales tax on those drapes, but not necessarily on any labor of somebody hanging those drapes for you. So if you bought the drapes from another party, paid the tax, and you had somebody come in and hang the drapes for you, they would not charge you with sales tax because it was a service. If something is being installed on not real property, otherwise known as tangible property, you would pay a sales tax on material and labor. Let's use an example of your car radio needs to be replaced. You go down to Best Buy, you buy a new car radio, you have Best Buy install the car radio, their Geek Squad. You would end up paying sales tax on the material and the labor. So that means that you would pay a sales tax on the radio, and you would also pay a sales tax on the labor charge for installing the radio. Manufacturers who make something but they don't install it, and let's just say, let's talk about, say, cabinetry. You go to a cabinet shop and they manufacture cabinets, but they don't install them. You would not pay any sales tax on materials purchased or the fabrication labor. So if the manufacturer is selling it, say, to a retail outlet, they would need to get an exemption certificate. They wouldn't collect the tax. If they were selling it to a final user, I, as a homeowner, go in and I decide I want to buy a cabinet directly from the manufacturer and they sell it to me, they would charge me a tax. The manufacturer would not pay a tax on the materials that they use to manufacture that because they're going to collect the tax from the end user. The state of Florida only wants to collect the tax once. They're not looking to double dip. And so basically, wherever the end user is the the individual that basically ends up paying the tax. So how about manufacturers who do install? If an item is being and it's being permanently installed on real property, the manufacturer has to pay sales tax on the items used in the manufacturing process and the labor used in making it. However, the reality of the situation is, if I have a cabinet shop and I have several people employed making cabinetry, they're not doing that 8 hours a day. They may be doing other things. They've got to set up the equipment in the morning. They got to break it down at the end of the day. They have to clean up the shop at the end of the day. There may be paperwork involved. They may be loading or unloading cabinetry or raw wood. Those labor hours aren't taxed. But that's a detailed record keeping that a lot of businesses don't do. So what the state says is that, they will accept a percentage split. So say, for example, somebody is working 8 hours a day, but 6 hours of the day are used for the manufacturing of the cabinets. The other 2 hours are used for the breakdown, setup, and so on. That means that 75% of their time, 3/4 of their time, goes for manufacturing. You have to charge a tax for their labor hours. The other 25%, there is no tax. So that's a manufacturer who manufactures the cabinet, brings it out to your house and installs it. If a manufacturer makes something that's not permanently installed, and it's not on real property, so you go to a shop that manufactures draperies. They bring them out, and they're going to install them, and say they're installing them in an RV. It's not real property, because it's not a building and it's not land. So they would collect sales tax from the customer, the final user. If the customer is a reseller, obviously they wouldn't collect the sales tax. The reseller would collect the sales tax from the final customer. Repairers. This is another interesting and quirk in the law. If no material is used, there's no sales tax because basically it is a service and they are not one of the taxable services. Give you an example. I use an individual who's a mechanic, and he does not purchase any parts. He has his customers purchase the parts, and he just charges the labor for putting them in. And so as a result of that, there is no sales tax charged by this individual. He doesn't have to collect any tax on the materials because since I bought them, I paid the tax at the time that I bought them. Now let's talk about the fact that your car dies, AAA comes out, and you need a new battery. They put a new battery in your car. It's off-site from the shop, so you must pay a sales tax on the entire invoice. So that is the battery as well as the labor used to, to come out to your car and to install that battery. If it's material used on site but not on real property and it's not permanently installed, the battery can be removed. You have to pay a tax on the entire invoice. If it's permanently installed on real property, the repairer pays the sales tax on the material. You don't pay the sales tax. So example is plumber comes out to your house, has to turn around and repair something, repairs a sink, repairs a toilet or whatever. There's material that are used. The plumber pays the tax when they buy that material. You're not charged sales tax. However, you will pay the plumber, who obviously will factor into his pricing the cost of that tax. Talk about shipping. There's no sales tax if you can pick up the good yourself. An example might be that you go to a furniture store, buy a couch, you buy some furniture, table, chairs, whatever the case might be. They deliver, but they charge a delivery charge, $25. They do not collect sales tax on the delivery charge because you could have gone to the store and picked up that item. The state uses a rule of thumb that if you're within 50 miles, you can go and you can pick up the item so they don't collect from you. If its delivery is greater than 50 miles, then they're expecting that retailer to collect a sales tax on the delivery. So, let's see here. Okay, the annual reseller certificate. When you register your business with the state of Florida, the Department of Revenue, you will get a new certificate each year that basically is your reseller certificate. So, for example, at one point in time, my wife and I had a retail business, and we would buy items that we would resell, and we also bought items that we would not resell, but we would use in the course of the business. The items that we resold, we had to charge tax for. The items that we used in the course of the business, we paid tax on. At the time that we bought the items that we were going to collect a tax on, or we were going to resell, we had to give to the wholesaler our reseller certificate number so that they could record it. And we'll come up and show you a little later in terms of where that is recorded. And when that is recorded, you report it to the state that you bought some items or actually the person who sold it to you would report to the state that a certain portion of their transactions were sold to people who would resell them, and they were responsible for collecting the tax. But you need that certificate. And we've covered this to where they're goods that are going to be resold or re-rented. It also goes for renting. And it applies to commercial property too that is going to be re-rented. So say, for example, you own a building or you lease a commercial space and you decide that you're going to subdivide it and re-rent some of that space out to other businesses in a timeshare fashion. Those individuals would be charged a sales tax. You could use your reseller certificate with the owner of the building and say, look, I don't have to pay the tax. I'm collecting it from the final end user. That you've got to document for each sale for resale. So you need to get the number off of the certificate, and you should obtain a copy of the certificate. If you go into Sam's Club or BJ's and you want to set up a tax-exempt account, they're going to want a copy of your reseller certificate so that they have it on file. And because they have to report to the state the dollar amount of the transactions, and if they're audited, they've got to provide who they made the seller, who they made the sale to, and tie it back. You can't use it to buy goods that you're either going to use for your own purposes or that you're going to use for operating your business. Goods that aren't going to be resold or re-rented. So, so collection of taxes, okay? Taxes are collected based on the sales price. Sales price includes all property or all charges necessary to complete the transaction. So tangible personal property, the tax is due at the time of the sale. Time of the sale is when you either make delivery and you receive consideration, which is the money. So the taxes then becomes property of the state of Florida at that point of time. And it's their money, not yours anymore. And as a result of that, they're looking for you to give it to them at a certain point in time. Same thing on admissions and taxes due at the time of when the ticket is sold. The law in the state of Florida says that you must separately state on your invoice the sales tax. You cannot put on your invoice that the tax is included or that you are absorbing the tax. That is illegal. You're also liable for any taxes you fail to collect. So say, you decide to, you have a retail business and there's a street fair and all the businesses are going to, put up a booth or go someplace and set up tables out front, and you don't collect any taxes that day, but yet you sell a couple $100 worth of goods. Well, you have to report to the state your sales for that day. And if you failed to collect the tax, you're then liable for it. So you've got to pay the 6% on whatever you sold at that point in time. As I mentioned earlier, the tax belongs to the state of Florida at the time of collection. At that point on, it's the state's money, and they want it. That's all there is to it. There's no ifs, ands, or buts about it. So what's a use tax? A use tax basically is a way of ensuring that even though you buy something outside the state and you're going to use it inside the state of Florida gets its money for those items. So And if you can't prove that you paid a tax, then you're still liable for that tax. Businesses have to report and pay a use tax on the sales and use tax return. And you'll see that when a little later we'll flip the return up here. And at the bottom of the paperwork, you'll see where use taxes, are reflected. So let's just take a look. Internet or mail order purchases shipped to Florida are subject to a use tax. Now, UPS, FedEx, they deliver a lot of packages in the state of Florida. They deliver a lot of packages to businesses. Theoretically, a use tax is due to the state of Florida for items that you bought outside the state. However, I'm not quite sure how the state tracks that down. But if you ever get audited, you run the risk of having to pay back taxes for items that you bought outside of the state and that you're using in your business. Here, a good example of common purchases are office supplies, business furniture, computer software, and hardware. It's an issue where the state is saying you're using it in the state, you're using it in your business. If you'd have bought it here in the state, you would have paid a tax. We're due some money. So let's just say that the use tax is due when you may have purchased it for resale, but you used it in the business instead. And an example may be, say that you have a product that you bought and you have it in your inventory. The intention is to sell it, but then for marketing purposes, you decide you're going to use it as a display or a demonstration model, and you never do sell it. But you're using it for the business purposes. You should pay a tax on it. And if you went outside the state, say you lived you're up in Jacksonville and you decided you were going to buy a vehicle for your business in the state of Georgia. Well, Georgia, for example, has a 4% sales tax. I don't know if they do or not, but I'm just using it as an example. And so you pay 4% on the vehicle. You bring the vehicle back in the state of Florida. You register it in Florida. They want 6%. Showing the receipt says, look, I paid 4% in Georgia. They're going to turn around the state, Department of Motor Vehicles will turn around and will say to you, well, you got to pay the difference, the 2%, because you paid less than the tax that was due. And it's just another way that the state ends up, collecting the amount of money that's due. So the general tax rate in Florida is 6%. However, there are some exceptions for this, okay? And the exceptions are amusements machines, it's a 4% tax, but there's also a $30 charge plus 4% for each machine. So if you're running an arcade business, you're going to pay $30 a machine plus 4% on all the money that you take in. Electricity is at a different rate. And electricity is 6.95%, not the 6%. And then the state allows counties to set up a local option surtax for, or basically a bed tax for hotels, motels, and rental property. And rental property defined as something that is rented out for less than a 6-month period of time, a transient rental. In order to find out what the local tax is in your area or in different counties, you can go on to the Department of Revenue's website and pull that down and take a look at what each county charges. And I have a chart coming up a little later that will kind of give you a general idea. You won't be able to read it, but you'll have an idea as to where to go on the website. States also, or counties also have the opportunity of putting in a discretionary sales tax up to 1.5%. For example, in our area, Martin County, 6%. St. Lucie County, the sales tax is 7% because they put on a 1% surcharge. And then there's also a different rate up in Indian River County. So let's talk about the tax rates. The state uses a bracket system, okay? And the brackets are applied to the sales price for each transaction. However, in some instances, multiple items sold together are a single transaction. Example, you go into the grocery store, you buy a number of items that are taxable, cleaning supplies, paper goods, things along those lines, not food items. Okay, you go to the register, they come up to $10. You're going to pay 60 cents sales tax on the $10 because they're taking those multiple items and they're looking at them as one transaction. However, if you go to a movie theater and you're buying 3 tickets, they look at each admission as a separate transaction. So you're going to pay the sales tax for whatever that transaction is 3 times. And the next slide will give you a kind of an example of it. So here's an example on just a single, an individual transaction. Total sales $11. The item is 6% tax rate, so you're due to collect 66 cents on the transaction. The slide on the left, or the bracket on the left, shows you what the taxes do, anywhere from 10 cents on up to say $1.09, or in this case $1.16. But so for 10 to 16 cents, you're looking at a penny, 17 to 33, 2 cents, 34 to 50, 3 cents, and so on up to $1, right? If you were to do 10 separate transactions, say you sold something for $1, right? Or $11, you're going to pay 66 cents in tax. If you do 10 separate transactions of $1.10 a piece, the tax on $1.10 is 7 cents. It still comes up to the same $11. However, the tax due is 70 cents because there are 10 separate transactions. So your effective tax rate, instead of it being 6%, is 6.36%. Well, I mentioned the local option. Counties have an opportunity or an option to raising taxes by another 1.5%. And this is collected along with state sales tax. You've got to send it to the Department of Revenue. They will remit back to the county what's due to those counties. How they figure that out based on the form that to where they, that you file when you send in your taxes due, I don't know, but they have some way of determining what they're going to remit back to the separate counties. There are some counties that don't impose this tax. Martin County is an example, flat 6%. St. Lucie County, 7%. So they impose a 1% surtax. If you have a business and you're delivering into a county that has a different tax rate, you're obligated to collect that tax rate for that county. And, and then reflect that on your sales tax form. Here's this is a chart, and you can find this on the website for the Department of Revenue, DOR at myflorida.com. And this gives an example of the discretionary taxes by county, so that you know how much to collect on those other counties that you're selling into. There's also on the discretionary tax, there's a cap. So for the first $5,000 of a single sale, you're going to end up paying the additional tax. All right. An example, you buy a car in St. Lucie County. The car is $25,000. You're going to pay 7% on the $5,000, first $5,000, and then 6% on the $20,000 after that. So the filing requirements. Talk briefly about the fact that the state wants their money to do on the first of the month, and you're late if they're after the 20th of the month. If the 20th happens to fall on a holiday or a weekend, and then you get the first business day following the 20th, but it's due at that point in time, anything after that, you will pay a penalty on. And, you can pay electronically, and it's due at 5 p.m. on the last business day prior to the 20th if you're paying electronically, as opposed to filling out the form and mailing in a check. If you're filling out the form and mailing in a check, then it has to be postmarked, on the day before the 20th. So you can file electronically, as I mentioned earlier, and the state is actually encouraging people to move in that direction, and they provide you a collection allowance if you timely file and pay your return electronically. There's less handling for the state. It automatically goes into the bank. This is the form, and it's that the state requires that you fill out. I realize this is very difficult to see. However, there's a couple things that we ought to take a look at. Okay, up here, and box 1 is gross sales. So say for the month, you sold $1,000 worth of items. The second box is exempt sales. Of those $1,000, $500 of your sales went outside the state of Florida. You're not obligated to collect a tax on it. So then the taxable amount, the other $500, would go in the third column. And then the tax due, which would be the 6% on the $500, goes in the last column. This is the form that has to be sent in every month. Well, depending on the amount of tax that you're doing. If you have sales that are sold outside of your county, then the discretionary sales surtax is dealt with at the bottom of the form. And that's where those items are reflected. So let's talk about how often you have to file. If you're collecting more than $1,000 of sales tax in a year's period of time, you have to file monthly. If you're collecting $100 or less, then you're required to file annually. And 100 to 500 semi-annually, 501 to 1,000 quarterly. The state, when you first register with them, more than likely will send you a booklet that basically has 12 little coupons in it that you're due to fill out on a monthly basis and send in. And if your business comes up with less money in terms of sales tax, then they'll drop it back to other payments, or you can call them I've had a situation where with a score client who was setting up a home-based business, personal services, really was not selling any tangible goods. And we called, and they had sent the lady a booklet for a monthly form to be sent in. We explained the situation to the gentleman at the Department of Revenue, and he said, look, I'll drop back. I'm going to send you a quarterly booklet for the first year, and if your business, doesn't have any taxable income, as you're talking about, or very little taxable income, then what we'll do is we'll drop it back to either a semi-annual or annual filing. And although this says most new businesses are initially set up on quarterly filing, I've found that it's usually monthly. Sorry. Okay. So you can, if you don't have any taxes due, you can file by phone. That makes it easy. And the phone number that you call is 800-550-6713. That's also on the website. If you've signed up for e-filing, you cannot telefile. So you have to file a return even if no taxes are due. If no taxes are due, you can telefile. Otherwise, you've got to file either e-file or file the paper form. Now, how do you set up your business with the Department of Revenue? You can do it two ways. You can walk into the office in Fort Pierce, and you can register your business. When you do that, they're going to charge you $5. Don't know why, but that's what they end up doing there. If you go online and you set up your business at dor.myflorida.com, then there is no charge. And so let's say we go to the website. You go to the website, here's what you're going to see. As I mentioned, the state of Florida collects a lot of taxes. And so the website, you want to click on the part that says register to collect and report taxes. And once you click on that site, it's going to bring you to a questionnaire and asking you whether or not, is this a new business? Are you expanding your business? And is it a new site? And you go through and you answer the question. Once you answer the questions, you turn around, click on it, and they'll provide you with a form DR11, which is a certificate of registration. You must display this in a conspicuous place in your business that your customers can see, so that your customers know you're authorized to collect sales tax. You'll find most businesses have this framed somewhere nearby the cash register or close by the cash register, so that when folks are paying their bill, they can see the reseller certificate. And finally, okay. For additional information or assistance, as I mentioned, you can go to the dor.myflorida.com, and it will walk you through, or it'll answer any questions. You can put in the search engine on that website, and it'll take you there. Or you can call one of the 800 numbers, 800-352-3671. That 800 number will take you to up to Tallahassee. There is a local Department of Revenue office, as I mentioned, in Fort Pierce. And in Fort Pierce, those folks will be more than happy to help you. unless you're setting up the business. In which case, if you're setting up a business, they'll be happy to help you, but they're going to charge you $5. So, you know, if you're registering your business, I would do it on the website. Otherwise, you want to turn around and you want to yeah. Sorry, but I'm looking for something. The Fort Pierce telephone number is 772-429-2900. 772-429-2900. As I mentioned, they're very helpful. However, they're obligated to charge you $5 if you're setting up for the first time. So set up online. If you have any questions, you can give them a call, or you can email me, and I will be more than happy to contact the Department of Revenue and get an answer for you. I've done that for several SCORE clients that either were not able to or didn't want to ask a question without disclosing who they were and what type of business they were in for personal reasons. But I'll be more than happy to intercede on your behalf. And as I mentioned, you can get to me at titicus@bellsouth.net. That kind of wraps it up for our webinar. I have a few questions that I would like to ask you. And if you would be so kind as to answer those to give us an idea of how you felt about the webinar, the material that was presented, the way it was presented, and also the presenter. And I would appreciate you being brutally honest on all of those fronts. So thank you very much for attending this webinar. We look forward to seeing you and helping you in your business endeavors. Have a good evening.